Damn. You guys think we should buy this company? I don't know, man. We'll see. Hello, everyone. Welcome to Just Invest Today. And today we're going to be talking about this new company that I'm kind of looking at, thinking about investing in Skechers. Yes, Skechers, because everyone knows not a lot of people shop there. We don't know about the company. It feels like a very old company that no one really talks about. So let's get into this new company that I'm thinking about investing in, or if we should get in, or if we should just leave this company alone. So, guys, before we invest into this company, we have to understand the business. Are we capable of understanding Skechers as just as a business? Then we got to find out what's the moat. Does this business have a competitive advantage over its competition? Does it kind of leave everything in the dust, or is it just an average business that we can't really rely on? Then we had to look at the management. Who owns this company? Are they doing a good job of owning this company? Are they returning money back to us? And we got to figure that out. And then we got to see if it's a good price to buy. We got to look for a margin of safety price to see what exactly is this price of this company, and if it's a good value right now, and if we should pay for it. So we got to look at those four things before we invest into this company. So when I'm trying to figure out the meaning of the business, I want to first look at the industry as a whole. So we know that Skechers is in the footwear business, and it competes with Nike and Adidas. And as of right now, the market's at 350 billion. So it's projected in the future to go up to into 2027. It's projected to go to 530 billion, which is really good news. And that's around like a 5.5 annual growth rate for the footwear business in total. So we can look at that and project that this company has a lot of way to go because it's still in a growing market, which is very good news. So Skechers is a footwear company. It started in 1992 by Robert Greenberg, and this company always has kind of been like a more casual kind of footwear company. And as of lately, it has moved way into more of the performance categories, more casual kind of lifestyle categories, which is very good news for the company because that's where the trend is going. Actually, you can see a company like Lululemon is skyrocketing because it's in that trendy athletic leisure type of market, and that's kind of where Skechers is going to because it sees the trends of different companies and different suits and different categories. So that's really good news. I think a lot of people don't even realize that Skechers is the third largest shoe company behind Nike and Adidas. And I think that's what I really like about this company is because it's very undervalued and underappreciated. Not a lot of people know about this company, which is very surprising. Uh, because it's still a growing company. Like revenue has been growing 12% year over year, and that's a very strong growth company. So it's very low key and very underappreciated, which is actually a very positive sign for Skechers as a company. And when I say not a lot of people know about this company, I really mean that no one thinks about Skechers when they're thinking about buying shoes. Like I never hear people saying, "Oh, let's get these new Skechers," or "Let's go to this mall to get some Skechers shoes," which is a very fascinating thing since it's the third largest shoe company. So that's what I mean when I say that. So now let's look at the mode of the company. What's going to separate this company from other companies? Like, what is the competitive advantage that this company has over Nike and Adidas? And my first thing is I think it's brand. They still have a good brand. It's noble. It's still out there, right? So Skechers people can identify the company, identify the brand, and they know what it is, which is a good thing. But I still think it's not as strong as Nike and Adidas. So that's still a kind of mid thing. So it's not like a crazy strong competitive advantage. And then the next one I think is a good competitive advantage for Skechers is the diversity of the products. They have so much things like everything on this site. They have casual wear, they have workwear, then they have lifestyle, then they have performance, and then they have sport. So the diversity of the products, like Nike and Adidas, don't have all that type of stuff. Like they're very athletic focused and more kind of lifestyle, casual kind of focus, but more athletic, I think. And Skechers is all of it. So they're reaching more people. Their market is bigger. They even have hiking. They even have winter boots. So just like the range of the company is way bigger, which is actually good because they get more market share. And then lastly, the moat, the price, the price points of Skechers products compared to Nike and Adidas is way different. They have stuff that's expensive, but If someone wants to get some casual stuff, it's usually $100, 110. It can even go to 90 and 80. So, and then the Nike and Adidas, they're fighting for a higher price range. They're going up, they can go up to 200s, 220s, and Skechers has that, but a lot of people are still going for the 90s, 80s, 100 market, and that's where Skechers I think has the dominance. It has a low price compared to all the other things. And that's a really good thing right now because as you know there's a pandemic going on and people are trying to look for deals. They're trying to get steals. So Skechers can provide that lower prices. People don't have as much money as now. So that's a really good competitive advantage I think Skechers has over the competition right now. And when we find all these competitive advantages, then we gotta match that with the numbers. What do the numbers say? We can't just look at what our opinion of the company is. We gotta actually look at what the numbers. Do the numbers match what we're saying? Because when the numbers match what we're saying, we're gonna see the numbers be very strong and very competitive. So the equity growth of Skechers in the last 5 years have been around 17%, and that's amazing. That's better than Nike and Adidas. 17% in the last 5 years. The revenue growth has been around 12% in the last 3 years, and since 2011, it's been 16% revenue growth, which is very, very strong. And that's how you know this company is still growing because the revenue year over year is growing every single year. The ROE, the return on your equity, the ROIC, they're all 10 to 15% to 20% year over year. So we know we're getting a lot for our money. They're investing our money very good, and they're continuing to grow the equity with our money. So that's very positive. And every year they've been growing their free cash flow. In the last 5 years, it's been getting to like $1 billion of free cash flow for Skechers as a company, which is very excellent. It's very good. So Robert Greenberg, the management, he's the CEO of the company. And this is very good news because he's actually the founder. Back in 1992, he founded the company. So that's really good because he has a strong ownership into the company. His net worth is attached to the company's success. So that's very good as shareholders because as the company does good, he does good, and we do good, and we do good together. And that means that he's not going to do anything crazy because if anything bad happens to the company, if he's not as successful, he's going to lose money. And you know these CEOs, they don't want to lose money. They want to gang the company. They want to grow their baby because they always had it. They're the one who made the company. So when their net worth is attached to the company, they have a big insider ownership of the company, then you know that's a really good news. And it's a family business because a lot of the family are actually insiders too. They own part of the company. They have roles into the company. So that's very good on the management side of the business. And then when we look at the management side too, in their last shareholder meeting and what they talked about in the company, they talked about growing the company, growing the revenue, increasing in the international business. And that's where I see the big catalyst in this company. They have so much room to grow in India, in Japan. They still have a lot of room to grow in China. They have so much growth ahead of them. So that's what I like about this company, and they don't want to give away a dividend because they want to use that money that they're growing with the company, and they want to use that to grow and expand the company. So that's a very good sign on the management side. They're very shareholder focused. They buy back shares, and that's what they're very strong at too. So the management I say is like the A plus plus because they really want to grow this company, make it bigger, and it's still a small company, so there has a lot of room to grow. If you believe in the thesis of this company, I still think the stock is undervalued. So Skechers is a $5 billion stock right now, and I think that's still low because if the company is growing 14% year over year, where I kind of have my estimates at, I think the stock can be around $58 to $62 maybe in a year or 2 years. I'm not too sure when because anything can happen. But that's where I kind of have my estimates at. And I still think the stock is very undervalued right now. So but that's if you believe that the company is still going to grow and the international side of the business is still strong and it's still going to grow year over year. And it's been growing around 32, like 30%, 20%. So if that continues, if there's no hiccups, because we already know, like, there's a lot of issues with the US and China and then the distributions and if there's going to be extra taxes on the products overseas. So there's still a lot of questions regarding that. So but if you still believe in the company, you still believe it's a strong company, then I still think it's an undervalued company. So I want to know what you guys think about the stock. You think it's undervalued? You think it's overvalued? You think it's gonna grow anymore? I want to know what you guys think about the stock and your opinion about this business. So if you like this video, please like this video. Please subscribe to my channel, and I'll get back to you guys. See you later. Peace.